Good morning and welcome to the XM.com weekly market update. With me again is Peter Mcguire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Getting into the happy season.
Here we go, 2 weeks Christmas.
You know, it's not far off now. No. So now these markets, still plenty going on. We'll start domestically. The Aussie dollar is under a heap of pressure at the moment, now sub 64%. It's gone down about 2 cents in the last 2 weeks.
I think you're being very kind to call it the Aussie dollar. I think one could term the Aussie peso at 63.7, 63.8, Andrew. It seems to be a race to the bottom. And do we see sub 60?
Yeah, well, you look at the pressure that it's under. So we had the GDP numbers out last week, very low numbers. The only thing really driving the economy at the moment is government spending, which
government jobs,
which ironically is keeping inflation up.
Yes,
which doesn't help the Reserve Bank.
100%.
And then obviously the immigration that's coming in. And
well, we were supposed, just for our global viewers, I thought it was about 420,000 per annum as far as immigration to Australia, and they knocked the ball out of the park and had over a million people in 1 year.
It's huge numbers.
And for a country that only had 25 million, yes. And then the impact that has on all forms of infrastructure and housing is just immense.
It is, it's enormous, yeah. So yeah, the economy is not looking flash at the moment, and we've got a productivity chart here as well, which is pretty damning from an Australian perspective, where there's just the productivity is just not there. And the manufacturing is not there locally as well. A lot of that's disappeared.
Yeah, I mean, we understand that they offshored to cheaper nations, the likes of Vietnam, Bangladesh, certainly China. And I think that's where, if you look at the big picture, what President Trump's wanting to do was bring it back home. There is obviously, maybe Australia's got to copy that in years to come and bring it all back home.
Yeah, I think the political parties, because of all the bickering, doesn't help. No. But there's just got to be a common goal here, I think, for the sake of the country. So
yes, well, that leads us even to the next part as far as France and Marine Le Pen. What's happening in the UK with Nigel Farage? Do we see a sweeping change to the right? And that could drastically change, the footprint and the performance of those nations.
Yeah, potentially. Looking at China, the CPI numbers came out very low. PPI was actually a negative number.
Yeah.
So we've talked about China quite a bit in the last few weeks. There's the plenary meetings currently underway in China.
Yeah, it starts today, Wednesday, It goes for a couple of days.
So there's plenty of talk about more stimulus coming.
Well, that was pedal to the metal. They didn't back down, and that was, what I read was it's as aggressive as we've seen in the last decade or more from the Chinese. Now, the markets were up 3.5% yesterday, and they gave back some of those gains to around about 1.5%, I think the Shanghai was. So let's just see where, again, the impact leading into the first quarter, whether that can be sustained. But we know that the overhang that they've got from property sector and debt is going to be very dramatic if they can't manufacture internal demand.
Yeah, and that has a big impact on Australia as well, with the resources that we ship there.
Exactly, and that's that race to the bottom for the dollar.
For sure. Looking at the Shanghai, it's been pretty good since early October. Over the course of the year, year to date, it is up 15%.
Yes.
So compared to the S&P, which is up about 25%, that's a huge difference.
Yes.
But from its lows around that September, October, it is up about 25%. So we saw that huge spike there.
Oh, yeah.
So depending on what the Chinese government does, we might see another tick up there.
I wouldn't be surprised. I mean, they've said it. They want to cut. They're all guns are blazing, and they're not backing down as far as their aggressive stance. So you would think you'd see another leg up from equity markets. Their consumption as far as gold, Andrew, has been unheralded, and their central bank buying over the last matter of months has been very, very dynamic.
Yeah, for sure. Europe looks like we're going to be getting rate cut this week, which is pretty much expected. So.
Well, and a double, 50 basis points. So it's a bang, bang, not 25. And that, again, how do they, I think, re-engage that economic engine, the likes of Germany, the likes of Italy. It's
they're already pretty flat. Those bigger economies over there are quite flat at the moment.
Germany's under some major impact.
Yeah, as is Italy and France. Yeah,
and that tells a story with a 104 handle for the euro, back at 105 now. But boy, oh boy, that could. Everyone's saying parity. Let's see, because if this all impacts, if they cut rates, and the US, we're going to see how those numbers drop. If they don't drop rates, then obviously you're going to see the euro come under major pressure to the downside.
Quite a few of those currencies will, for sure.
Yeah.
Plenty going on. We've got, obviously, Bank of Canada looks like they're cutting again this week.
60% probability of a double, 50 basis points.
And we've got the US CPI numbers out later tonight, our time.
Yeah, and Australia, you might want to mention something now because there's no chance, that rate decision yesterday, there's no thought there as far as a rate cut.
No, she did change her tune slightly, not aggressively.
You're ever the optimist.
So you'd sort of think, surely February has to be in play to a certain degree.
Many investors are saying April, and some are even saying it's going to be pushed out to winter because from an inflation standpoint, you made reference to it. She's very focused on one thing, inflation.
Yeah, but if it's just getting driven by government spending only and the rest of the economy is really struggling, and those GDP numbers tell the story.
Yeah.
Like that, they could have quite easily cut 25 basis points yesterday and not had any major bearing on anything. That's not going to fuel inflation. No way in the world. That's just going to give a bit of relief
to the mortgage holders.
Yeah, that's what it will do, and that's what everyone is crying out for.
Oh, 100%.
So
I saw a report come out from Tom Panos, a well-known Sydney property market analyst and an auctioneer, and he talks the talk. And he's seen property prices down 6 and 7% in that 3-month window. When he's talking Manly, he's talking across. This is for the Sydney viewers, well, the people that are aware of Sydney. Good luck, not absolute, the Point Pipers and the Darling Points, but he's talking, that $3 to $4 million range. They're down $200,000, $300,000, $400,000.
Tells the story.
Well, this goes back to your point. He made reference to Michelle Bullock.
Yeah.
Please, we need some help.
Yeah, which. It's sort of interesting where, as I said, I wouldn't be surprised if February comes into play after another couple of months of figures as well. So we'll get plenty of data between now and then.
We've got to get through Christmas sales.
Yeah, and see what happens after that as well.
Yeah.
Sure. All right, we'll keep an eye on things and we'll have catch up again next week pre-Christmas.
Yeah.
We might do a bit of a
year that was.
The year that was.
Wasn't it an amazing year?
2024 wrap, yeah.
Yeah.
So it's, going back to what some expectations were back in January, and like usual, most analyst and economic
commentators were wrong.
Yeah, pretty much all the time, yeah.
Well, yes, they were. And another thing, I really would have thought that with the Syria situation really, exploding over the weekend, that gold or maybe certainly crude oil would have seen a run-up. But it hasn't had any impact at all.
It's pretty incredible where they had all this global conflict and the markets have just taken it in their stride. Where in every other previous cycle, if you like, equities would have been down, oil would have been up.
And up big.
When it's been pretty much the opposite.
Yeah.
So, which is pretty interesting times we live in. So,
yeah.
But we'll do a bit of a recap next week.
I look forward to it.
Great, thanks, Pete.
See you, Andrew.
And that's the xm.com weekly market update.